Hello, and thank you very much for joining us today. My name is Randy Wostratzky, Director here at the Spectrem Group. Very happy to be joined by George Walper, Spectrem's President. Today we're going to go over some of our latest Spectrem Investor Confidence Index data from the month of March, look at some of the trends and insights that we've been able to garner in the past few weeks. Additionally, we're going to walk through a few slides taken directly from a recently published report, the $1 Million Rollover Opportunity that we fielded in late 2017 and just went and published about a month and a half ago. But before we discuss the $1 Million Rollover, George is going to lead us off with some of our latest data from the Investor Confidence Indices. George.
Thank you, Randy, and hello, everyone. Thanks for joining us. As Randy said, we want to start today with some insights from our Spectrem Affluent and Spectrem Millionaire Confidence Index. As a quick reminder for those of you that are joining us for the first time, this index measures wealthy America's attitude towards a number of factors in their life, how they're investing, what their intentions are, what they're worried about, in two different ways. The first would be folks who have a net worth over $1 million, and then a broader population of folks that have a net worth over $500,000. We've been doing this since the early 2004. When I look at this past month and I look at the whole year, which we'll look at here in a moment on the next slide, I'm struck by folks when they go to an amusement park, and some folks love to go on roller coasters and other folks do not like to go on roller coasters. You think of what the market's been doing since the first year with the volatility, and on any given day the market's at a low, a high, a low for the year. A lot of folks didn't necessarily sign up for this volatility. We're seeing the same thing with the index shifting month to month. With where we are right now at the end of March, the index dropped 4 points for the overall millionaire index, and the affluent index dropped 1 point. The meaningfulness there is that now the gap between the two is starting to narrow. We always look at that gap. Historically, with only a few exceptions, a few months since 2004, the millionaire index has always been more confident than the overall affluent index. And you can see that here on this slide, the top being the past 12 months, the bottom being the roller coaster since 2004. But just look at where we are from a year ago in April, although it looks like only being down 6 points from a year ago in April. And then also look back to March, you see where we're down. It doesn't look so bad when you look just from 2 points in time, a year or 13 months apart, but you look at what's occurred in those 13 months. It's pretty significant roller coaster, down and up and some down and up. We always like to look at this relative to a trailing 3 months and sort of a future 3 months. And you see, obviously this month we're trending down. This is clearly a correlation to what's happening in the market and the volatility in the market, that it is kind of a whipsaw effect for people's overall confidence level in the economy. A key component for us when we look at this index is how do wealthy folks feel about a number of factors in their life. We call it the affluent or millionaire household outlook. You can see right now that from a mathematical scale in our formula, it's at 28. And that has context. It essentially is where it was a year ago. But look how much it's dropped since January. And look how January ratcheted up from December. Essentially, it's been pretty positive trending since about September, but now back to where it was a year ago. So this is a key measure. We will look at some subcomponents here in a short period of time. The overall outlook compared to last month was dropped down 1.9, and as I said, from a year ago, it's up 2, and then you can recall everything in between. Household income, which is a key component, is down from last month. What folks think about the economy. Now, this is a driving factor when you look at, this is the only one that's down significantly from a year ago. So that's always a factor about what people think about the economic outlook overall. And then, interestingly enough, either the company they own or where they work and their overall assets have some positive trends. What are the most serious threats to their financial goals at the moment? Continues to be the combination of political climate and market conditions. It's been that way for well over a year, and we would expect, relative to this type of a question, that will continue to be at that type of a level. when we look at these same questions, looking at folks who are working versus folks who are retired, the political climate affects retired folks far more than working folks, and vice versa, a little bit about market conditions. Keeping in mind, for those of you that have followed our research for many years, the wealthier Americans tend to have a higher percentage of folks who are retired. So it's not surprising that the biggest impact was political climate. Market conditions, perhaps they feel a little bit more insulated from what's happening in a day-to-day or month-to-month basis. We looked at the same thing relative to millionaires versus affluent, and they're essentially very much the same this particular month. It's always interesting to look at that from a time-to-time basis. How are folks thinking about investing in major asset classes, equities, bonds, short-term, and real estate? You can see that stocks, both mutual funds and individual securities, down somewhat from last month, down from the high point in 2012. And then the same thing for fixed income. We would expect to start to see cash increase in terms of both the defensible position, but also as interest rates continue to increase. I think you will see that driving some of the more older folks of this population that do look at that from an interest rate standpoint, from an income standpoint, month to month. As Randy said, we are going to shift a little bit and talk about $1 million rollover study we did. I mean, this is a population of 401k investors whose primary retirement asset was driven by 401k. It's folks that have large IRA rollovers. But it's an opportunity both for the retirement market and the wealth market to think about targeting these particular folks as they work or as they move into retirement. So I'll turn it over to Randy.
Thank you very much, George. A little bit more background on this particular study. It was fielded from July through November of 2017. In order to qualify to participate in this particular survey, respondents had to have at least $1 million in net worth, not including their primary residence, and had to have recently rolled over at least $800,000 in assets from a defined contribution plan, 401k, 403b, 457, etc., into an IRA. We had a total sample size of 421 respondents who were able to qualify and take the survey. In addition to that, there were a few questions that we asked of people who are not currently retired, but do have plans to roll over at least $800K from their DC plan into an IRA in the next couple of years. This first slide here is referencing what the action that was taken in the rollover of the assets. And as you can see there, a very strong majority rolled over their assets into an IRA managed by their existing financial advisor. Please note that in this question and one of the subsequent questions, it is mutually exclusive, so the respondents were able to select more than one of these options. Certainly showcases the fact that, again, financial advisors certainly have a significant impact working with wealthy investors that have such a substantial amount saved up in their qualified plan. While at the same time, these wealthy investors even do have, you can see by the 23% level there, brokerage accounts that they direct on their own. Looking here, we're asking questions of the respondents, the different type of retirement account, that they hold, as well as the mean value of that account. So you can see a significant balance in the rollover IRA account there at $1.64 million. Not surprisingly, you still see over 50% of the respondents that do hold a Roth IRA, but that is the lowest mean value. Much of that driven by the fact that the Roth IRA has the income component, where if you are making over a certain amount, that you are not able to contribute for that year. So it is not surprising that that is the lowest amount, yet still over 50% actually have that product. Going into a question about the importance of these employer-based plan assets, you can see there the middle section talking about half of their assets, but not the only part of their portfolio. And then there at just over a third, 35% say that these assets represent the largest portion of their retirement assets. So you do have a small number of folks at just over 20% that say that the assets are only a small part of their overall net worth, while other folks you will see there have more dependence on outside sources of income for retirement, things like Social Security and other investment vehicles and other retirement income-driven products. As you can see here, again, the financial advisor was very heavily involved in the decision of these respondents relative to how they kind of went through the thought process of rolling over their retirement assets. Certainly you had a spouse that was included in this discussion in many occasions, as well as those that just kind of took it upon themselves to make the decision about what was going to happen with their qualified plan assets. And then finally here we have a small chart but significant relative to various degrees of satisfaction that these respondents have with their financial advisor. And this is certainly higher than the overall wealthy investor market, which we categorize, again, as those who may be familiar with Spectrem, those that have $100K in net worth all the way up to those with $25 million. This population of respondents certainly represents more of the millionaire and ultra high net worth group, and not as many that fit into the mass affluent group. And traditionally, you see higher levels of satisfaction with the higher levels of wealth, and certainly this is no exception. With the highest here, where you see 9 out of 10 respondents that are very satisfied with their FA's responsiveness to their requests. You can see additional insights from this report, from other reports, an expanded analysis of our monthly affluent and millionaire confidence indices in our High Net Worth Insights newsletter, which we do release the first business day of each month. That is something I would certainly be happy to speak with any and all of you about. If there are additional inquiries that you may have relative to personal or enterprise-wide based subscriptions, as you can see by this page, you can see a little glossary. We do have a significant number of topics that we cover, pulling in various sources and various data points from proprietary Spectrem research, and then aggregating them in this manner in the monthly Insights newsletter. So I do encourage you to reach out to myself, George, or anyone else here at Spectrem if there's anything at all that we can do to be of service. George, anything else you'd like to add at this time?
No, thank you. Thank you very much for joining us today.
Thank you, everyone.